My name is Frank Fortunato. Welcome to CATEX-TV. This is a live broadcast coming from Princeton, New Jersey. Today is Tuesday, August 4th, 2009. It's 11:30 a.m. Eastern Daylight Time in the U.S. It's 4:30 p.m. in London. In Mexico City, it's 9:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. On this day in history, on August 4th, 1914, Britain declared war on Germany, pretty much irrevocably plunging the European continent into the Great War. Also today is the 48th birthday of this man. This, of course, is the President of the United States. I think we'll have his photo up. If we don't, it doesn't matter. You know who he is. It's Barack Obama. He's 48 years old today. We also have some other interesting news before we get to the economic news. Earlier today, former President Bill Clinton arrived in Pyongyang, North Korea, supposedly on a mission, a private mission. The White House is saying that he's carrying no message from the president, but he's apparently trying to secure the release of the two American journalists who wandered into North Korea and are being held under strict prison sentences for 12 years. And about 3 hours ago, apparently, Mr. Clinton met with, guess who? One of our all-time favorites, Kim Jong-il. They had dinner at a state house. It'll be very interesting to hear what the results of that meeting were. Mr. Clinton is the first Western leader, former Western leader, to meet Kim Jong-il in quite some time, so it'll be interesting to get his report of that meeting. Economic news in the United States: pending home sales rose for the 5th month in a row. That's good news. U.S. consumer spending rose. That was good news. What's not so good news is that U.S. personal consumer income dropped. That was a bit of a surprise. Stock market's up about 4.25 points right now, and we'll go to our main news. AIG is in the news. The New York-based insurer has named former MetLife chairman and CEO Bob Benmosh as its new CEO. The AIG board approved the appointment of Mr. Benmosh yesterday morning. Effective August 10th, he takes over, succeeding Ed Liddy. The government, of course, has committed more than $170 billion to AIG, and it owns an 80% stake in the company. Benmosh will be tasked with carrying on AIG's efforts to sell off assets to repay government loans. The company also announced that Paula Rosput Reynolds is stepping down as vice chairman and chief restructuring officer late in the third quarter. Reuters is reporting that the company is close to a deal to sell its asset management business to a group led by Crestview Partners for approximately $350 million U.S. Earnings reports are out. Munich Re has posted a first-half gain of about 1.6 billion U.S. The second quarter profit rose to 703 million euros from 628 million euros. Gross premiums written were up about almost 10%. In primary insurance, first-half results were hit by the current financial crisis. Although natural catastrophes in the first half, quote, remained manageable in number, the company, the reinsurer, suffered losses of about 450 million euros in man-made losses. This is up from 350 million euros last year. Of this amount, 217 million euros derived from claims in credit and surety reinsurance business. The company's acquisition of the Hartford Steam Boiler Group, effective April 1, did help push premium income up. In reinsurance, it increased it by 14%. So that's good news for them. Even better news was Everest. Everest Re, based in Bermuda, reported a 43% jump in the second quarter net income in the second quarter of the year. Net income rose to $272 million compared to $153 million. For the first 6 months, and to June 30th of this year, net income was $381 million U.S. compared to $231 million for the same period last year. Their combined ratio also improved, down to 87.9%. It had been at 94.4%. Flagstone came in too with good numbers. Their profits have been boosted by investment gains and increased premiums. They recorded a 62% hike in second quarter net income, up to 67.8 million U.S., and a 35% rise for the whole first half of the year, up to 103 million. The investment portfolio looked an awful lot better as well. Net realized and unrealized gains amounted to $7 million and $5 million respectively for the second quarter and 6 months, compared with losses of $9 million and $22 million last year. They say that the 2009 gains were largely attributable to positive performance on commodity futures. That's pretty good news, I guess. The reinsurance segment reported combined ratios of 64% and 70% for the second quarter and the 6-month period, improvements of 10 points and 0.6 of a point over 2008. Those are very good numbers, and Flagstone says they're mainly attributable to lack of catastrophes. And just down the street, even though they had a pretty good year, John Charman was making news. He's saying that insurers lack the courage to push through the necessary rate increases he says they need. These are insurers, not reinsurers. Unveiling sound second quarter and first half results, which were nonetheless down over last year, Charman pointed to the mixed market, the break between insurance and reinsurance. He said, quote, "I'm disappointed that the insurance market has failed to harden more broadly when it's so blindingly obvious that it is the path it should and must take. The need for change is obvious, but the courage to change is lacking." By contrast, Charman noted that the reinsurance market was continuing to show strong leadership and disciplined pricing overall. AXIS's net profit for the second quarter totaled $159 million. It's down from $231 million a year ago, but it did see a 43% increase in reinsurance underwriting profit. It was wiped out mainly almost by a complete drop in underwriting profit on the insurance segment. The insurance segment underwriting income of $16 million for the quarter still represented an impressive 90% combined ratio. Reinsurance underwriting income totaled $125 million for the quarter. That reflected a 69.5% combined ratio. And a small Philippine-based insurance company, CICI General Insurance Corporation, has been shut down. They declined to submit a financial report for 2008. The insurance department is reporting that in Manila. Earlier in June of this year, the insurance commissioner said that one non-life insurer in the Philippines did not meet the net worth requirement, and CC General was widely assumed to have been the insurer in question. The insurance department imposed a requirement that Philippine insurers increase their capitalization level up to Philippine $50 million a year and to have a net worth of 500 million Philippine dollars by 2011. Half of the net worth needs to be in paid-up capital. CC General used to sell fire, motor, marine, aviation, engineering, and liability policies. No more. Stock market remains up a couple of points. We'll go to a word from our sponsors and come back with the rest of the news.